Well, since the financial crisis, the stock market has enjoyed a stellar run, bolstered by easy monetary policy, a strong labor market, and now tax cuts have boosted corporate bottom lines. With stocks in rally mode, one might expect that life is tough out there for short sellers. But our next guest says that even with the bull market in full flight, there are plenty of companies with big issues they are hiding from investors. Ben Axler is the founder and CIO at Spruce Capital Management. Ben, thanks so much for joining us.
Thank you for having me.
All right, so let's start with the macro environment for short, because I think the media narrative around markets tends to be inherently bullish, right? Stocks are kind of an optimistic investment. And then the idea is that when markets go up, shorts must lose. But I think that's not quite right. How do you see the dynamic between the macro bull market perhaps and kind of what you're looking at in individual companies?
Right. So we're taking a very forensic look at the companies that we focus on. In particular, we're looking for companies that are hiding financial strain through aggressive accounting. Particularly, we've had a lot of success at looking at companies that do M&A. Acquisitions to maybe paper over some problems. We're looking for companies that we think will underperform the market on a relative basis. We agree it's a very strong market. Growth stocks in particular are receiving high valuation, so you can't really short a stock because it's overvalued. That just doesn't work. So we really have to find problematic companies that are declining organically, ideally layered with a lot of debt, poor management, and most likely to miss aggressive estimates.
Yeah, now when you think about your place inside of someone's portfolio, I once heard Jim Chanos say that the value of a short is it allows you to be more long. So is that kind of the way that you think about your place in the broader management landscape? Because obviously you're not kind of out there with $1 trillion, right? You're trying to find specific situations where you can create alpha for your investors.
Correct. So shorting's not for everybody. It's very risky, as you pointed out. We do look to hedge some of our risks with some market hedges, but we do expect that our shorts will underperform the relevant benchmarks, and in many cases, the campaigns we've run, we've seen the stocks underperform. We've been good at driving corporate change, whether it be companies divesting businesses, we've called it as problematic, auditor resignations, companies revising guidance estimates lower. That we think will drive alpha and form a core part of an investor's portfolio.
Yeah, now I want to talk about an issue that I think was a little bit hotter a couple years ago, kind of cooled off, and that would be the difference between GAAP and non-GAAP earnings. You mentioned forensic accounting,
sure.
And I think that distinction between everything a company has to put into that net earnings number and then everything they can take out. Are there any trends that you're seeing just broadly that managements have been able to pull off tricks in the last few years to say, well, see, our earnings are great because everything's adjusted out, everything's non-GAAP. Meanwhile, there's a bunch of junk in the GAAP number.
These games are still being played out, and a real-time example is our last idea, Maxar Technologies. Mm-hmm. Here's a satellite company that sells satellites that are basically going away. They bought a company called Digital Globe. They're trying to sell to the market that they do almost $5 of adjusted earnings per share, but they don't generate any cash flow, and they're not going to generate really much cash flow for the next 2 years. So we think the earnings are almost meaningless. If you were to value it on cash flow, they have $3.7 billion of adjusted debt. We think the stock could be worthless. So This non-GAAP, GAAP issue is continuing to be pervasive.
Now you mentioned Maxar. Now what I found interesting in your case is that the CEO of the company was actually involved with another company. He was the president at another company that you had shorted successfully in the past. So when you think about, obviously you have the accounting side of it, but how much does the management of a company you're looking to short play into it? I mean, do you see patterns where people just end up running bum companies time and time again, and you can track personnel moves as much as you can track the numbers?
That's a great point. That's exactly what we do. For every company we review, I first look at the management, I look at the board of directors, we do background checks, try to make sure that their bios are being accurately presented. In the case of Maxar, we found the CEO had claimed to be the COO of NCR, but he was really only a group COO. So there was some form of embellishment going on there. But it's really the people that are behind the numbers, that are driving the financials, that are making the assumptions that go behind the earnings. That's what really gets us excited when we compare, a bad management team with a bad company and a bad balance sheet. Then you have the perfect short.
Yeah, now you mentioned in the case of Maxar again, there is a scenario where you get to a terminal equity value of 0. So what's kind of what are the problems facing that company specifically? Maybe that you could think about, or that other investors could think about in a general setup, right? Is it that they have too much debt? Is it that their earnings are bad? Is it that they're misstating things? Or is it just kind of a company that doesn't have a very good business model?
We don't think they have a good business model, but they're in a little bit of a pickle right now because they have a $66 million dividend that they have to pay investors every year. They also have a $300 million CapEx burden, hundreds of millions of dollars of interest expense. They either have to de-lever or go into more debt to pay the dividend. So we've been trying to tell management, hey, look, do the right thing, conserve the capital, eliminate the dividend, put that capital to pay down the debt. That's a bad scenario to be in. If they listen to our advice, focus on paying down the debt, they might get a little breathing room.
Yeah, now we're talking about management. I do want to ask you about one CEO in particular, of course, making headlines. That would be Elon Musk, complaining about short sellers. Now, you obviously are having a lot of difficult conversations with management. When you go out and target a company, you say, we think something is wrong here. But his comments on short sellers, he's almost blamed them for the problems at Tesla. As someone who looks at businesses skeptically, is that a red flag to you? Like when the CEOs are immediately publicly pushing back? I mean, I think oftentimes CEOs probably say, yeah, there are some things that aren't great here. But what does it say to you when a CEO is taking to Twitter, taking to every media platform he can to say, no, it's those guys that are doing bad things. I'm doing everything right.
It's absolutely a red flag, right? Why not just focus on performing, focus on your business, forget about the externalities and the people that are distracting you from producing the results that you've told your investors you can produce. If I were Elon Musk, I'd be focused on hitting the numbers, producing a good product, and the rest will take care of itself. By focusing on deflecting issues against the short sellers, certainly I think investors should think that as a red flag.
Yeah, certainly the history of CEOs who have gone out and said bad things about short sellers, not great when you look at the businesses over time. All right, Ben Axler of Spruce Capital, thank you so much for joining us.
Thank you for having me.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.